Hey everybody, it's RJ, your host, and welcome to Hash It Out. In this episode, I'll be speaking with Narbe Alexandrian of Riv Capital about the role that both small, local businesses and corporations from other industries play in the cannabis industry. We'll also discuss the logistics of entering the booming cannabis industry in the US as a Canadian company while the nation continues to tackle federal illegality, concerns on the pending federal cannabis policy reform Senate bill, and more. Without further ado, let's hash it out. My guest today is the president and CEO of the cannabis-focused acquisition and investment company, Riv Capital. Welcome to the show, Narbe Alexandrian. Hello.
Hey, thanks for having me. Really excited to be here.
Hey, thanks for being here, man. Now, first and foremost, where are you joining us live from today?
I am calling from my home in Toronto, Canada. At the moment.
Oh, okay.
Yeah.
Right on, right on. I love T-Dot, man. I don't get up there nearly as much, especially in the last year. But I've been to a few concerts up there. You guys got some great venues up there for sure, for live events. Thank you so much for being here today and sharing, of course, some of what you've got going on over at Riv Capital, and then, of course, talking about the wider cannabis conversation here in the U.S. I know you mentioned you're in Toronto, but we certainly have a lot happening here in the U.S. too. And so let's just dive right into it here. Some of the biggest news happening right now in terms of what's going on over at Riv Capital is in August, Riv Capital entered into definitive agreements with the Hawthorne Collective. Now, for those out there who may not know, that is a newly formed cannabis-focused subsidiary of the Scott's Miracle-Gro Company. And that deal was done for the purchase of $150 million US in an unsecured convertible note from Riv Capital. I understand that the investment establishes Riv Capital as the Hawthorne Collective's preferred vehicle for investments not currently under the purview of the Hawthorne Gardening Company. And I also understand that Riv Capital plans to acquire, invest in, launch, and develop U.S. assets to build a multi-state cannabis operating and brand platform. So just tell me more about how that deal came to be. How did y'all even, end up on each other's radars? And what does that mean for your company in the long run?
Yeah, absolutely. So we've been working on this for close to 18 months now prior to announcing it in late August. So prior to Riv Capital being what it used to be called Canopy Rivers. We used to, way back in the day in 2017, we were the venture capital arm of Canopy Growth. The company spun out. I joined the company in 2018 with a fresh focus of it being an independent and autonomous company. So our view at the time was, let's do venture capital type investments, minority, which is below 50%, take a small stake of those companies, watch them grow in this rapidly expanding environment, and then potentially exit off of that afterwards. The difficulty we had with that model was that we were a public company, so everyone's looking at us every quarter and asking us, what are you doing? Give me an update. And the venture capital type model, which is typically for private funds, that is a 5 to 7 year time horizon. So there's a misalignment of the public company structure and now venture capital looked. So we wanted to pivot off and become an operating company. Trouble was we were stuck in Canada, and by having Canopy Growth as one of our largest shareholder, who also had a control interest in us, it was very hard for us to go to the U.S. plant touching side with all the issues with federal legality and how they're on the New York Stock Exchange and how they're related to Constellation as well. So we worked on, ever since I joined, which is now going back 3 years ago, we've been working on moving away from that structure and focusing on the U.S. market. And it took about 18 months to really figure out what type of a structure we would be able to present to our shareholders to say, hey, this is how we can move away from the Canopy Growth structure and focus ourselves in the U.S. And a lot of that delay was management changes at Canopy Growth, and we had to wait till a good deal was structured that I could take to my board and my investors. So got that done with. We announced in December of 2020. We closed it in February of 2021. And then the next focus was, let's go into the U.S. market and let's go touch the plant and become operators. One of the key pillars that I think all companies should have, not only including us, but something that we've really ingrained in our culture is go out there and talk to large corporates. No matter if they're interested in cannabis, whether they put $1 in, never put $1 in, don't like it at all. We've gone out to dozens of large corporations, tobacco companies, liquor companies, beer companies, pharma companies, agriculture companies. And we've gone out there to say, hey, don't know what if you want to get into the cannabis space, don't know if you're already in there or not. But for what it's worth, let us give you an hour of our time to tell you how we think this industry is going to shape out and what to watch out for and how to angle yourself to ultimately get in when you're ready if you decide to get in. So through those 3 years of doing this with over a dozen of these companies, we've really gained a nice Rolodex of contacts in the industry. Some of them gone out to make investments and we still keep in touch with them. Others are still on the sidelines watching for federal legality to take shape. Excuse me. And one of those companies that we really liked was Scott's. Since the first time we met them, we noticed that we're all thinking on the same lens in terms of we wanted to build a platform long term. We didn't believe that the exit strategy here is federal legalization in the U.S. We believe it's what it looks like 15 to 20 years from now when the industry has matured, where a smaller company cannot get in anymore because there's shelving fees and the large corporations that have licenses and lobbying efforts, and it really kicks off the small person, the small mom and pop. And that's not going to take shape for another 15, 20 years. So lots of greenfield room to grow. So as soon as we got off of that Canopy Growth transaction, which we sold three interests in three companies for about $380 million Canadian, we bought out some Canopy Growth with some of that. We paid off all our liabilities with the rest of it. And then we got the Scott's investment in, which is $150 million US. So in total now we have about $325 million US and geared up for the US market.
I see. Okay, I want to go back to the Scott's deal in just a bit, but I'm just curious, just for giving myself a little context here. You mentioned that you had joined Riv Capital about 3 years ago, and Canada has really been on the forefront in terms of cannabis policy reform on a federal level in that country to our neighbors to the north. And so I'm just curious for you, what are what passions regarding cannabis and the cannabis community led you to be interested in wanting to join the industry?
Absolutely. So I come from the tech industry. So I spent over a decade in venture capital and tech, working for the largest tech VC fund in Canada prior to joining Canopy Rivers and now Riv Capital. And at the time, tech looks a lot like cannabis. It's a high growth industry. No one knows where it's going to go. It's growing by 40, 50 to 100% per year. So everyone's making an educated guess on this is how the industry is going to grow. So that lends itself very well to the transferable skills from tech. And seeing companies like Shopify, which was one of our portfolio companies, which we got in very early, now worth $180 billion and plus. I had a blueprint in mind of like what's the DNA of a company look like that needs to grow to become, call it unicorn status, $1 billion plus valuation, and when do we get in there and what are some of the telltale signs. So when I looked at the cannabis industry, I kind of looked at it as there's no institutional type investors, there's no Silicon Valley type VCs, there's a lot of angel investors, so high net worth individuals, there's a lot of hedge funds that give you big chunks of cash, but put a gun to your head and say, you need to go public ASAP. So right. The traditional institutional, let's think long-term type structure just wasn't there. So that's one of the guiding principles that got me there. And then secondly, I just had this huge appreciation for cannabis, the plant, as a consumer, as an educator, as someone who's been watching this industry for quite some time grow from the illicit market to what Canada had in terms of legalization. And I really just was a big fan of the industry and the product. And I thought, here's something that I've seen countless times help people with critical illnesses, help people with arthritis, muscle joint pain, anxiety, depression, you name it. Anecdotally, there's maybe over 100 ailments that cannabis does relate to. And how cool is it that nobody's been able to do anything with it for 95 years? So everything that we've seen from the 1900s to the early 2000s in all other industries, such as like the CPG, the birth of CPG, and how we've seen genetics grow in the tobacco world, and how we've seen alcohol become like this mainstay product, even though it's a vice. Cannabis hasn't done any of that, and now it's like trying to catch up. That's a cool place to be. That's a cool place to build your expertise in. And In 10, 20, 30 years from now, when someone says, I'm in the cannabis industry, one of us could say, hey, we've been here for 20 years and we know a ton about this industry and all the players here. And you become one of the guiding voices of where the sector is going to go.
Certainly. And I'm curious, you mentioned your connections not only with cannabis, but with tech before. And, historically, one of the, I guess, the mantras, at least in Silicon Valley here in the United States, which, of course, is a tech hub in this nation, was to move fast and break things. That was that was Facebook's slogan. That's what a lot of tech users or tech developers sort of use as their mantra. And so I'm just curious, because you mentioned your connections with both, I just have a philosophical question. Do you see that mantra working in the cannabis industry? We're having a period right now of such accelerated progress and industry moves and legislative moves after, like you said, 95 years, decades, generations worth of stagnation when it comes to cannabis policy. So does that translate at all, or is it maybe too brutish of a statement to make?
Yeah, I think it's definitely something you're seeing all across the industry. So I'll use Canada as an example, and then I'll use the U.S. as an example after that. So in Canada, federal legalization took place in 2018, so September 2018. Prior to that, everyone was given a year from the point in time where we knew legalization was going to come about to the point that it actually legalized. And during that time, everyone was making guesses. And one of the issues with how Canada played out was the government basically said, hey, we're here to give out licenses for cultivation facilities, and it's not capped. Anybody can get a license so long as they have the right paperwork and everything lined up for it. And of course, that comes with a cost. So everyone started building facilities, thinking that, hey, if Canada's legalizing, G7 country, US is up next, Europe's going to open up, everything's going to flow, globalization is going to play out, et cetera, et cetera. And that's not necessarily the way that you should see how these industries grow, because what was happening at the time was companies were betting on infrastructure and supply, saying that if I have supply, there's all this pent-up demand in the illicit market, they will come to me. Not thinking about, hey, I need the right product, I need to get to the consumer in a proper way, I need to distribute it in a proper way, and I need to be able to do it at a low cost so that at least I'm competitive with the illicit market and my peers. So all these facilities started getting created. And there was hundreds, if not billions of dollars, hundreds of millions, if not billions of dollars put into these facilities to grow them up before legalization even took shape. And then legalization happened. And then you saw that not everyone was jumping on the bandwagon, and the US was still taking its time in terms of legalization, and Europe was still moving slowly. And so things weren't moving as fast as everyone thought, but it was still moving in a positive direction. But you had all these facilities geared up to make hundreds of thousands of, if not millions of kilograms of or pounds of cannabis, and the market was tiny still, relatively to the amount of supply. So a lot of these companies picked up debt as well. So what happened was their debt comes due, the interest comes due, they're not making enough cash flow to pay off this debt, then they go under. So you're starting to see that more and more. And now the focus has turned over the last, and COVID really screwed things up with the supply and demand as well, because you couldn't really do anything for a few months. But now you're looking at these companies and the larger licensed producers in Canada, and they're selling off their cultivation facilities because they can't be cost competitive. And they're focusing on demand generation. How can we create brands and give them to other producers to produce the quality we want? And there's pros and cons to it. The pro is that if we're running a brand, you and I, and we use a third party to produce for us, if it's not to the quality that we want, we just won't buy it. On the flip side, on the downside of that, is you're giving up some margin to the cultivator, but at the end of the day, you provide your consumer with what they want, which is high quality, high THC, good terpene, cosmetically good looking bud from a flower perspective into the market at a reasonable price. In the US, you're seeing something similar play out right now. Everyone is rushing to create supply, and especially in these limited license states, without thinking that, hey, in 10 years from now, interstate commerce is going to play out. The states are going to start talking to each other. And what happens is the cannabis grown in New York can be competitive with the cannabis grown in Arizona, dry climate, lots of sun, Texas, lots of sun. Can you be cost competitive with that? Can you be cost competitive with parts of California, which have great grows outside? Chances are no. So that product's going to come into the rest of the U.S. So how do you gear yourself up to that? Is always have that lens that as federal legalization plays out, interstate commerce is going to be 5 to 10 years away from that as well. And at that point in time, cannabis is going to be free flowing in the U.S. Are you cost competitive, or do you have a brand? And if you have neither of those, then you're going to be stuck just like a lot of these the Canadian companies are stuck.
Certainly. And I want to touch a little bit more on the not only interstate commerce, but the federal cannabis policy reform in the U.S. because that Senate bill unveiled by Chuck Schumer, Senate Majority Leader Chuck Schumer, has been open for public comment, and a lot of cannabis organizations have been leaving comments regarding particularly interstate commerce and protecting the presence of small businesses. But just going back to the deal with Scott's again, in talking about building these brands and making sure that you're ready to enter the market when it eventually does become federally legal or decriminalized or descheduled here in the U.S. The bill has sort of been conflated a little bit when it came out. Some people thought it was a legalization bill, and it was reported as a legalization bill, but doesn't expressly legalize cannabis in its current form. But in going back to the deal with Scott's, I'm just wondering why it was that you saw Scott's as the right partner for this. Scott's is, of course, a big corporation, and they're not without botanical controversy throughout the years. So, what was it? What are the benefits that you guys are going to see in your partnership together? Yeah,
so I think the transaction helped us leverage our cannabis domain knowledge as well as our investment expertise within the space with Scott's expertise in operations, R&D, sales, and distribution. So, if you we have a strategy which is to acquire and develop U.S. operators and brands. We already have some near-term prospects in line that we were trying to build out. And what we really liked about them was their long-term focus. And it wasn't simply, hey, let's wait to get to legalization and then we'll just move off of this and sell it. Instead, it was like, let's build a big business out of this that can sustain itself for decades and decades. And they're a family-run business that's been there for generations. Their employees are very loyal. They stick around for multiple decades. So you could tell from the genetics of the DNA of the company that this was a long-term player that was here to stay. Their Hawthorne division supplies a large amount of MSOs and licensed producers across North America with hydroponics and LED lighting and fertilizers and all the different products that are needed for growth. So they have a deep expertise in the cannabis market. And then we had the same type of thought, and we met in the middle, which was, in some ways, we did see ourselves developing a multi-state operator, or MSO, but in other ways, we saw that we were developing an anti-MSO, because our focus wasn't on, let's just build it and it'll sell itself because that there's supply and demand imbalances within some of these states, but it was on, let's go find companies and operations that aren't necessarily cannabis companies, they call themselves, but they're actually consumer-obsessed companies. Like, that's the number one thing they do, is just the obsession around the consumer. They go beyond THC, they go beyond terpenes. It's about reaching the right consumer, whether that's medical or recreational or adult use, with an exceptional quality products at a good price. And when we kind of met each other there and said, you know what, we're seeing the same thing. We're seeing all the mistakes that some of these larger players are making. We can actually fix that. Everyone's been rushing, like your tech analogy. They made a bunch of mistakes, burnt a lot of money. Let's do it the right way now that we've seen those mistakes and we know those players, and let's build something out. That was kind of the meeting of the minds. So it was good to see that that there is complete alignment between both groups.
I see. And so moving then from that to our conversation again about the federal decriminalization bill here in the U.S., I mentioned that the bill has been open for public comment. People have certainly made their comments known so far. For example, the Colorado State Attorney General issued a memo to members of the U.S. Congress imploring them to safeguard small and local cannabis firms from being swallowed up, as you mentioned earlier in our conversation, from big tobacco and other corporations. They voiced fear that the corporations could eat up the sector if precautionary measures aren't implemented, and also said that guaranteeing that small businesses continue to have the ability to join in on the cannabis sector is a top responsibility. Now, Senate Majority Leader Chuck Schumer, who is one of the authors of the bill, along with Senate Finance Committee Chairman Ron Wyden and Cory Booker, he has sort of stated or promised that the proposal will aim to limit the potential of corporations overtaking the sector. So, in your view, how can we ensure that those small businesses continue to have a place in the cannabis sector? Is there a balance that we can strike between, say, the big corporations who might make... I had someone on the show recently, Ryan Douglas, who made an analogy sort of along the lines of craft beer, the craft beer movement, how you have, the big companies, you have the Constellation brands that are, on the supermarket shelves, and then you also have your craft growers too. So how can we ensure that we continue to have that balance, or that we do strike that balance in the long run?
Yeah, so take a step back. When we think of large corporations just gobbling up these smaller cannabis companies, you have to really focus on where the money is coming from, right? So is it the small companies which are paying lobbyists to go talk to governors to say, hey, watch out for us, we are a $1 million revenue per year company? Or do we look at small companies as being the large MSOs, which are relatively much smaller than the large liquor companies and beer companies and pharma companies? And I think it's the latter. I think it's the large MSOs are just scared of these larger companies like the Constellations coming into the U.S. market and taking up all these companies through acquisition opportunities. And the reason I say that is because the cost of capital for a traditional non-cannabis company is wildly different than what you see for MSOs, as well as the smaller ones. So if you're a small company trying to get debt in this industry, you're paying anywhere from 12% to 20% per year in terms of interest rate. Like you're in credit card territory. If you're a large Fortune 500 company looking to get a loan, you're in the low single digits in terms of the amount of the cost of capital for picking that up. So that's one of the things they're always scared of. These larger MSOs is like, what happens when these companies come and take our money and take our customers. That said, I think there's this right balance. One of the things that larger corporations do that's beneficial, and I'm not representing any of them, is that they bring professionalization to this industry. So everything that's happened to like VapeGate, which was like a couple of years ago, to some of the quality issues that you're seeing, when you bring a publicly listed Fortune 500 company into the game, and I've seen this with Canopy Growth, you don't make mistakes like that anymore because there's a lot on the line for all the parties that are out there. But at the same time, you do have to protect those small businesses. These small businesses are going to have issues growing. Like they might make cash flow, they might be cash flow positive, but do they make enough cash, and can they save up enough to go and launch into a different state? Chances are no. So they're going to hit a wall, and they're going to think of it as, I either sell now or I just clip a coupon or clip a cash flow off of this for a long period of time and build this into a lifestyle business. And that goes the same in cannabis as it does in technology, as in and many other high growth industries, which to grow, you need capital in order to grow. So I think it's definitely beneficial to keep the liquor companies and the alcohol companies away from this industry for some time, to help these smaller companies grow into something that can't get bullied by these large corporations. But there's going to come a time when the large corporations will be able to come in, and that's not such a bad thing for the industry at the end of the day, because it will provide the credibility to take this thing to the next level.
I see. That made me think of a quote from one of a movie that I used to watch a lot when I was a kid called Daddy Daycare. I don't know if you ever saw that movie with Eddie Murphy. Yeah, they're like talking about starting the daycare, and they said, I think it was Eddie Murphy, or no, it was the sidekick character that was like, to make money you have to spend money, and then Eddie Murphy said, well, to spend money you have to have money, right? And so yeah, that just made me think of that line from that movie. My last question for you, Narbe, and thank you so much for being generous with your time. I appreciate that. Is we're already well into September, and I cannot believe that I'm saying that already. But what have you got in the works for the rest of the year over at Riv Capital? What are you looking forward to the most, in addition to this recent deal with the Hawthorne group? And what have you also got in your scopes for the years continuing?
Yeah, so we already have potential near-term prospects, and we're engaged in discussions with a number of these companies for transactions that will launch our U.S. strategy. And then afterwards, we do want to grow on that by focusing on acquisitions and investments in other states, as well as brands and operators that have strategic interest in what we're trying to build. So we do anticipate that we can go forward with this strategy, announce something, and potentially close something within the last calendar quarter of 2021. And afterwards, just keep continuing to build on that. So this isn't going to be a one and done type story where it's just one company that gets acquired and then we just focus on that. Like we have ambitions to become a large U.S. player. So there's going to be a number of steps that we need to take to get there. But the first one's the most important one because it's the one that lays the foundation for all the other acquisitions, partnerships, licensing opportunities, and so forth. I do see that there's tremendous opportunity on the Northeast in these limited license states. Oh, yeah. You have new states coming online that are saying, okay, we're open to medical, and then they're open to adult use, and there's only 10 licenses in that state that are for 20 million people. So that there's a lot of opportunity there in terms of growth. But at the same time, you're just not seeing proper brands being developed when there's such a limited amount of supply out there, because there's no need to create a brand. If I just make my cannabis, someone will buy it. That's a scenario we're in. So I think there is some value of looking on the West Coast, where somewhere like California or Colorado, intense amount of competition. If you're one of the top 10 companies there, you have the talent, you have the consumers, you have the brand name. Can we port that over to the East Coast and give those to brand-starved customers out there that are willing to buy anything? And I think Cookies has done a fantastic job of doing that by moving from California to Michigan. And I know Terracen bought Gage, who was a licensee holder of Cookies. So huge success there. And it's kind of the similar thought process with many of the other brands, both in flower, but also in edibles and confectionery, as well as in beverages and the like.
Certainly. I think brand starved is a really great phrase, because from what I hear from the people on the northeast side of the country, it's very much that. It's very much that's exactly what I've been hearing too. So we will certainly be keeping an eye on everything happening, of course, in terms of legislation here in this country and all you've got going on over at Riv Capital. And Narbe, thank you so much for spending your time and offering your perspective as to all that's happening. There's certainly a lot to talk about. So thank you so much for your time, and continue to be well and stay safe out there in the wild world, man.
Thank you so much. I'm a big fan of the show, so really I'm blessed to be here talking to you today. So thank you so much.
Oh, right on. No worries. I mean, we could always rehash it out for a round two whenever you're ready, man. Yeah, no doubt. Yeah, there you go. Same place, same time. Yes, indeed. Awesome. Same link. We'll use the same link even to get on this call. Yeah.
Let's do it. Every day.
Yeah, you too, man. Narbe Alexandrian, everybody. Thank you so much for watching. That is it for Hash It Out, y'all. I am your host, RJ Balde. Thank you so much again for watching, liking, commenting, and subscribing, and I will catch y'all in the next one. Peace out. Hey everybody, thanks for checking out our channel. Click here to watch another episode of Hash It Out. To find more cannabis industry reporting, insider stories, and to stay up to date on the latest trends, make sure to subscribe and keep up with our Trichomes community app. Download it now for free, and we'll see you there.